you in the first place? I think that would be really good for the audience to learn about.
So the way I see it, the most popular domain registry, well, for people who don't know, domains are the things like .com, like youtube.com or google.com. You buy and sell those.
They're on a domain right now watching this. Yeah.
But the problem I see with most domain registries and marketplaces is that they are not optimized for domain investors, which are people who buy domains looking to make profit in them. And like with GoDaddy, the only thing it like for domain investors is on like the bottom of the auctions page, which is like in a just a really far place, and like it's just hard to get into it, and even when you are into it, it's like hard to find good domains. And sites that are mostly optimized, like spamzilla.io, are complicated, and if you click on the filter, it brings up like an entire like page. You have to like scroll to get through it, and it's just like most of the stuff is like not even necessary. Like if you want a .tk domain, which is like, and it's behind a paywall. Most of the features, all of the features besides the front page, are a paywall, and that's one of the things I really not despise, but I don't like about modern tech company. Not that it's bad if you do it, but like subscriptions. Oftentimes you like they're just a ploy. Like you get the 7-day free trial and then they get billed for like months and months, and that's something I personally don't like. Like if you're doing that, it doesn't mean you're like bad, but like
right, you're saying you're trying to do it a little different.
Yeah, a little differently. So Domain Trader, it takes the simple to use AI of GoDaddy and the complex features of sites like Spamzilla, and it puts them together into one place for the domain investors. And we have our own features as well that we will add to the platform as well.
So in building this product, identifying the problem and the solution, have you talked to domain investors directly? Is this how you're kind of getting this feedback, or are you doing it for yourself, figuring it out?
I have talked to some domain investors, but also watching YouTube videos of domain investors and like what they see as good in like websites and what websites they recommend, and taking all that info. And
that's actually a great idea. I think taking YouTube, because YouTube, the how-to videos are fantastic, but actually searching the problem videos in the industry you're trying to solve a problem for, it could be a really good way to identify that. That's really interesting. So how long have you been working on this problem? What kind of prompted you to get to this spot, like to discover this problem? Like what got you interested? Because there's obviously a million different things you could have picked. Why this space? Like, have any background in it? What
I personally do not have any background in it, but it's something that I like, and I like looking at GoDaddy and looking at the auctions and stuff like that. It's just one of those things that like it's like a weird interest to me.
Yeah. I almost compare it to the do you remember the Madden Mobile sports cards? I don't know if you like the sniping area and all that. They're back then, guys. Like I said, back then, Madden Mobile, you could like snipe, and it seems like the market. It's almost the gamification of that, of trading and all that stuff. Probably interesting as well, I'm sure.
Yeah, kind of. So the company really started. The idea was at the end of spring, I believe, but I got contacted by someone interested, and I really started around the start of April, I believe.
Okay, the start of April. So it's only been about a month ago, a month or two ago. Hadn't been so long.
Yeah.
Okay. So did you, for someone to reach out to you, did you post about it? Is that how they kind of discovered the product?
Yeah, I don't remember which server I joined in, but I joined one, and then I got linked to another one, and I posted about it there, and then they were interested in, like, I think it was a VC Scout.
Okay.
Like, so yeah.
That's awesome. So again, we're going to talk about, go through the company specifics. I like to get a little background on where kind of your headspace was, where it led you to where you are today. So to talk about, you've iterated a little bit, but number 3, we like to talk about the solution.
Yeah. So as I said, the solution is we make a I don't want to be like posh, but a better software, a better place for people to buy and sell domains by making it easy to use and pleasurable to look at, and still having those features that those more complex features that you would want in a site like Domain Trader or GoDaddy or stuff like that.
Right. Awesome. And then what do you plan on launching this initially? Is kind of the idea to launch it through a web application? I'm guessing that's probably the path, correct?
Yeah, like a website, web application. Yeah.
Web apps. Okay.
But,
and I say, go ahead.
Possibly a mobile app down the line, of course.
Yeah, and I think it's good to have the visions for where it needs to go. Mm-hmm. But what I like to say, and again, just having all these conversations, the biggest thing I find is that I feel like the biggest separator between an experienced entrepreneur and a first time is it's hard to filter the noise. Mm-hmm. It's very hard to filter. And if you can master filtering the noise and picking one lane, because a lot of entrepreneurs want to start really broad. They're like, I'm going to change the world tomorrow. You can change the world, but let's take steps accordingly to get there. So what I'm going to try to guide you through this conversation, hopefully like kind of take away, is that if we focus on something very specific, we focus on a specific target customer, focus on a specific niche, focus on everything specific, a web application, you know how to launch it, you're going to be so focused on your plan. It's not going to be like, oh gosh, what do I do next? It can be like, all right, step by step by step by step, right? Mm-hmm. So that's hopefully kind of some takeaways. So I'm glad you got that focus. So number 4, this is a really fun one, the competitor analysis, and you've brought to light some of the competitors you're facing. So two questions in this. For the competitor analysis, tell me what maybe the market, like what are these companies doing in revenue? Like how big is the potential and what makes you different? You've iterated a little bit, but go back and reiterate what is different about your company.
So yeah, the potential, GoDaddy obviously being a huge company, they I think are sitting at $43 billion, somewhere around there. And then Namecheap, I don't think they have a formal evaluation, but they have like I think 10 million customers. That could change from the statistics I looked at a couple of months ago or a month or two ago. Sure. But we are different because we're doing we're having like less is more, but like having less clutter, but having more features, if that makes sense.
Is it kind of like simplifying the UI and the design of?
Yeah. And like making it more focused about the domains instead of like, because like the domains is going to be most of the money for most people, and like trying to sell them like web hosting for domain investors, they don't really care about web hosting. So sure. Like,
when you sign up for GoDaddy, it gives you like all those additional products, like the website, and it's annoying. Yeah. It is annoying for me, for sure.
Yeah, there's just a
lot of clutter. So with these competitors, you just feel like what the biggest value you bring, and we had someone else on kind of the same way. It's simplifying. It almost seems like you got these big companies that have evolved so much that it's almost like maybe we just need to go back to the roots and simplify the UI UX while still providing a great customer experience. So is that kind of where you see you fit to the marketplace, to just provide a simple, solid solution?
Yeah, I like simplicity. I don't really like a lot of what the web is kind of turning into, where it's just like ads everywhere and like it's like downloading random stuff and it's mining crypto in the background, and yeah, it's just like I want to make it simple, like how it used to be.
Yeah, back in the day, before you were born. Oh man, no, I like that mindset. I'm gonna tell you this, in business, if you can explain something simply, if you can show something simply, for business is simple, people go, oh, you have to overcomplicate it. Make it simple. Like, yeah. And especially when you're starting, right? Like as time goes on, maybe it evolves and things get bigger. But early on, like I love that mindset. We're gonna hopefully put a quote on screen. Keep it simple. But sometimes I have quote pop-ups in the podcast. But yeah, man, that's really awesome. And again, I think competitor analysis for an investor is so important, looking to get funded, is that by identifying, you see the competitors in the marketplace, they know that you're not naive to that there's other people out there. Some entrepreneurs go, this is a brand new idea. No, it's not. Like there's every single person has a competitor, whether they tell you it or not. It could be a far-fetched one. Maybe you are reinventing the wheel, but everybody's a competitor. So having a slide for this, just checking out your pitch deck, I think would be super valuable to showcase an investor, really what you're about. And post podcast, I'm going to send you a good day. I didn't even do it. I had one of the guys on the podcast make a fantastic, almost done that. But think that would be great from an investor perspective having that. So number 5 is the market potential, and this kind of segues from the competitor analysis, but you have the TAM, the SAM, and the SOM, and you really have the total addressable market, the serviceable addressable market, and then finally kind of the market you plan on capturing. This is a slide I think is super important. Do you have a slide on this, by the way?
I created this like a bit ago, and like it's so like I've learned so much just in those small time. So I think I actually do need to update it. But yeah, I will definitely add that. But I think I kind of know. But
go ahead. Just kind of spitball some numbers.
So the total addressable market, that there's not really a lot of statistics on that, because like, you know, who is registering domains for personal use, who is, you know, doing it, all that. But in the state of the web that it is now, I think we're in like what, 4.0, right? 5.0.
Yeah.
Domains are like huge, and even though a lot of the good domains like cars.com or like casino.com have been taken, there's always going to be more stuff. Like in like 2019 to 2022 or whatever, like it was all about crypto, like all these new crypto domains. And just in the like past year or 2 years, we've had like AI domains and stuff like that. So in hundreds of other things like smaller niches. So there's always going to be a market, no matter where or no matter what time you're at. So that there's going to be more customers, and when the old customers stop doing stuff, you know, you're always going to have more.
I love that, because especially what you talked about, because people think the .com is so saturated, but like you mentioned, people think the .com is going to be around for 100 years, and it could be around forever. But like the .io is super popular. There's a lot of domains that, you know, people think, oh, it's so saturated, but you're actually getting some popular domains pop up, which I think is exciting, because it kind of give people who can't pay $50,000 for a good domain some way to do it without looking cheap too, you know?
Yeah, it was like 1 or 2 decades ago, there was like about, I think like 8 like domains, and now there's like I think 1,800, and like there's just so many different, and there's more coming out every year, and it's just serviceable, the addressable market. I think this is we've seen interest from people who are like in the domain investing sphere, and this is a product made for them, and this is like, we want to make their lives as easy as possible. So I think as long as we can make it so they will gravitate toward us, opposed from the other sites, I think that'll be a great I guess I kind of answered that for obtainable market as well. But
yeah, no, it's good though. And I think kind of a business that reminds me of how you're even speaking about it is Kevin. I just watched a podcast recently. I love podcasts. Just, you know, obviously doing the podcast, but Kevin O'Leary just did an interview. I believe it was with the Iced Coffee Hour. Love that podcast. And he was telling about how he's starting a watch insurance company, because for a very niche thing of investors, the same way watch investors, and he was dissatisfied with how the watch insurance business operates, and he saw the flaws in that and goes, as a watch investor, the problem I would want to be solved is that every 24 hours you'd have a reevaluation of the insurance price. Wow. And that way it's up, because, you know, like a lot of times when you evaluate a watch in 3 months, the watch value can appreciate, you know, 100%. It could be insane, especially on these limited editions. So he's making a business right now where he's addressing a very specific group of investors, just like you're talking about, and it's for watch insurance 24 hours. And so, you know, he has a platform to become very successful, but what I like is that you are solving the problem for a very specific group of people. These are people who do it for a living. I mean, they do this full time, right?
Yeah, it's some domain. I think the one that sold for most is cars.com for like over $10 million, and like not all of them are obviously going to be like $1 million domains, but like these like $10,000, like you spend like $10 to $100 on a domain and you sell it for a lot more. Like this is a legitimate, not just a side hustle, but like a job for some people, and like making it easier for them. And like, you know, if you offer people to like a way to make them more money, they're gonna want to come to you. So
absolutely. And what do you? Because I'm actually not super familiar in the space. You know, I've heard about parking and things like that. Could you explain to the audience kind of like the different ways domain traders in the space like make, because they make money trading, but is there like a parking thing you can make money? Like, what are the different ways in the space to make?
Different ways to make space. You can be a person, be a company that facilitates the registration of domain. So if it's a domain that's never been made registered before, then
Mhm.
you register, and then you pay them, they get a cut, and then whatever companies they're associated with. Another way is parking for a fee. So you park it, and like they do like kind of web hosting, and they will have a page like this domain is for sale, and then it says like prices and stuff like that. Another way is, as I said, the domain investor. They buy domains for cheap that either have been expired or just someone is selling. And when a domain expires, you usually you I don't know what it would be, like rent it for like a year or something. And when that expires, it goes to a auction, and then you
Okay.
can buy that domain if you win the auction, and then sell it. And then the people who facilitate the people who own the website before you bought it, they make
Mhm.
money again. So yeah,
Interesting, because I think there's like a whole economy behind it.
yeah,
It's very intricate, especially if you don't know a lot about it. And having a couple businesses, I was surface level. I looked into the buying, obviously good domain, but it wasn't my special. So I bet the audience was. I appreciate you explaining that.
yeah.
So, in terms of your ideal customer profile, you talked a little bit about it, but let's say tomorrow I write you a check for $100,000, whatever you're asking for. Who are you going to be targeting with that money? Who is the like the ultimate ideal customer target?
So yeah, my one of the ideas I had is we have a sponsor spot on this channel I watch. I actually can't remember the name at the moment, but he makes videos about domain investing and helping domain investors, um, helping them like go the ropes, how to make money, what sites to use, and paying him to promote the site.
Right.
And that, I feel like that will get it out to a lot of the people who are investing in domains, and the people who are trying to change their financial, I don't know what the word would be, financial future, I guess.
Yeah, yeah. That's super smart because I'll be honest. I've asked a ton of entrepreneurs on here, what would you do if I gave you the money? And they're like, product. And I'm like,
Yeah.
no. I mean, product is good. Product is very good, but you're on the right track. You're on the track that I think a lot of people take a while to figure out. But marketing and putting the ideal customer profile, figuring out where to distribute that is super key, right? Like
Mm.
obviously the whole point of getting capital is working on limited resources and how to put that. So I think you're already thinking, we're going to get more into it in the actual marketing plan, but you're already on the right track of like the ideal customer profile and the people I need to target are very niche. And so let's target YouTubers maybe to do it. Let's
Mhm.
target specific Google SEO ads or even partnerships we're going to go into. So super great, guys. This guy, we better show some love in the comments right now. And just a plug, if you're a young entrepreneur, you're looking to raise money, apply to be on the podcast. We got to throw that in. So
Yeah.
super awesome. So number 7, this is the part I'm really excited about because I am very business oriented, graduated business degree. Not that that really matters because business is experience, as we all know,
Mhm.
doing it. But how are you going to make money? Is there going to be, it's probably not a free trial, but is there a free trial? Is there a tier? How are you going to make money?
So when people go to buy a domain, let's say like you sell a domain for $100, we will take a small cut of that, about around like 4%, and that is the main way of making money. One of the features that we tend to add, that we want to add, that is unique to our platform is domain trading, as in the name suggests, or domain for domain trading, where I get your domain, in exchange you get my domain, and you can like add money if it's in an imbalance, and that there's a fee associated with that.
Hmm.
Um, yeah. So, and
So is right now, explain to me, is there, because I saw that was kind of your unique factor in your deck. Is there a way right now to just trade? Like, is that even possible, or it's not possible right now?
it is technically possible, but there's no one facilitating it at the moment, and it is risky because you do have to trust the person that they will switch their IP to yours, and then like you could get your domain stolen, and it's just a whole hassle. Yeah.
So that's interesting. So you're saying and I think that would have been super great too in the uniqueness, but you're saying that There's not, as far as you're aware, there's not another platform right now facilitating these domain exchanges.
From my research, yes, I have not seen anything of that.
From research, okay, that could be a very interesting play because I think that is what your unique factor is, obviously, because I'm trying to think because again, I've been on a couple, GoDaddy, a couple others. If there's a way to do that, I'm not sure if there is. But you're saying that let's say the domain wasn't of equal value, but it still wanted to be an exchange. There would be cash compensation then added to that. Would you take a fee from that trade? Because in the same way, if there's no monetary value being exchanged, where are you making money there?
Yeah, it's you can. What we want to do is you multiple at the, like, if you depending if you want to do one domain, it's a certain price, two domains, certain price. So it's like a fixed price model, and then it's also a cut of the revenue that if it is in balance, we take some of that.
Sure, just go back to the original model, just taking on the actual cash compensation additional.
Yeah, and that's
so having a set fee for the actual trade, like some kind of low set fee, just based on how many trades. All that.
Yeah, and there's wiggle room. You could make a subscription model, because if you're like doing 10 trades a day, that's going to rack up over time. So if you just pay a flat fee of like $20-$30 a month, then that could be.
I think typically I am a huge advocate for the subscription model, but I actually love your idea of doing a flat fee and then maybe even do like a volume discount potentially. If you're doing 10 a day and the set fee is, I don't know, $10 or whatever. Let's say you set it $10. Then for every, for 10, it would be like $7 per, trade. That could be really cool. That could be really, I think, like I said, in the comments, this is the cool thing about the channel growing is people out there probably know. So that, I encourage, everybody out there, if you've heard about something like this, kind of encourage him and comment down below so we can kind of see. But I like the way you're thinking. I like that revenue model, and the revenue model is so important from an investor side because obviously it's how you're going to make money. And we're about to go into some forecasting and some other things. And when you're building the forecasting and all that, you're basically showcasing an investor like how much money could you potentially make. You mentioned GoDaddy, is $1 billion company by far, right? From their business model. Well, what we can do with forecasting is a lot of entrepreneurs, and I've said this on the channel, they'll go, my company's gonna be worth $100 million in 5 years. Okay. You've seen those Shark Tank evaluations. They're insane. And you're like, how? You're like, tell me how. And you're sitting there as an entrepreneur and he's like, or she's like, and the thing about it is financially planning here and forecasting, because this is what we could do in a forecasting when we get there. You might look at it and be like, maybe I'm charging too low. Like my business in 3 years, even if I'm very successful, it's not going to make a lot of money. Or sometimes you can be like, we don't even have to charge this. We can charge this with our expectations. So again, that's something we're going to go through in a minute, but just why it's important to tell an investor what the actual revenue model is. Super important, right? So number 8, now this it's highlighted if you'll check on the agenda, probably the most important, the evidence of success. And I'll go through ways where if you don't have any reviews or all that, how to do it. Do you have any evidence of success? Has anybody, where are you in the product stage? Are you early beta? Is there an idea?
We're currently looking for funding, and we have had interested people who have been interested in the idea. That was a weird sentence.
No, you're good. So it's not like any stage of being a working product yet. We're in idea central.
Yeah, not at the moment.
Okay, well, see, that's good that you're very clear on that, because I think that this is where I'd like to see you go with the evidence of success, because I had someone reach out to me and they're like, I'm super early. I don't know, where to show for here. But what I would recommend you do, and I think you could even do at your stage, is go on Fiverr.com, pay someone $50 for a landing page, right? Just get a landing page, get some kind of wait list going. And, posting about stuff is free. So post about stuff, use that to actually build a wait list slowly. And this side is going to be super important to investor, because you said, like, based on you talking to people and other that, there's demand. But what if you could show an investor that there's 25 people, 50 people, 100 people on a wait list waiting for you? You know what I mean? It's also a way for a wait list to build where you're getting customers waiting for you to like post about it. You know what I mean? Ready for you to kind of launch it. So what I would highly recommend, and that's not super expensive, is work on maybe getting a wait list for that. Also, you can interview people. you can ask people. It doesn't have to be like a podcast, right? But you can say for 5 minutes, you can ask one of the investors you've talked to, "Can I just ask you a couple questions and send you a video, and like you make a video for me," right? By doing that, when you're going through an investor deck, when you start reaching out, you don't even have to talk. You can go, "This guy right here is going to say everything for me." Boom, click a button, right? And then he's going to do that. So, or surveys. Surveys are a great way as well. So there's a lot of ways to use evidence success. And you see what I'm saying? These creative ways. Are you kind of what is your thoughts on that about all that I've discussed there?
That has been something I've been thinking about doing for a while now. It's just I haven't had the I haven't pursued it at the moment, but I think that's a good idea. Making a wait list. I know I'm on a couple wait lists myself. So
yeah, and it's again, going back to the cost of it, you might pay someone $25-$50 for a we're not talking about a decked out website. We're talking about a single page, like you said, a wait list, having an email address, and that is verifiable data to show to an investor. Like, this is something I have now. Again, some investors are going to want MVP product, but when you're early and you're young, I think there is an understanding of like, you don't have tons of capital, but the limited resources you do have, made a wait list, you've shown demand. Because an investor is, before 10, 15 years ago, you could raise money on an idea and it was super easy. You didn't even have to show a whole lot of them, truthfully. Now, it was recommended, of course, right? Because you want customers waiting, but it wasn't required. And now investors want to see anything they can because there are so many good ideas out there, but where's the demand? And I think for you, if just based on your idea, you just create a single page wait list, say, you're not able to trade domains anywhere else in the world. This will be the first if you sign up here. Dude, that's all you have to put. It doesn't have to be decked out. Because those people in that field are going to hear you and be like, they can't do that anywhere else, right? And another thing too is like, if you are the kind of person in this market, first mover advantage is going to be huge for you. And I think telling that to an investor as well is being like, this is going to be something that's going to be mainstream soon, but I found this first to market. So I think emphasizing that to an investor kind of gives that time, time delay on it. So I think that could be really big.
Yeah.
So number 9 is forecasting. Now, forecasting, like I said, is something I am really excited about, and I will send you, what kind of it looks like. But typically with forecasting, what we do is I like to set a 3-year roadmap, and you basically take the estimated amount of users, right, that you feel like are going to pay. So let's say the lifetime customer value of a user for a year is going to be, they're going to spend the average $10 or $15 on the platform, right? In year 1, you believe you're going to secure, let's say 100, 150, 200 people. Are you an analytical person, or how do you think?
I would say I'm analytical. I like when I am interested in something, that's like all I do. Like I like the stock market and stuff like that, and I like analysis of that. Recently I've been getting into like computer science and stuff in that field. So it's been really interesting. Just like, I would say I'm an analytical person.
I'll say this about you, because I like to say typically you go kind of in startup world, it seems you go 2 ways. You go kind of the tech route, or the very product focused person, or you go the business route and you're very marketing distribution. And what I'll say about what's interesting about you is you speak very well. I'm sure the audience would agree. Like, he speaks very well in front of the camera, just being at your age. If you can master the product and the ability to speak and distribute well, I mean, you're going to be unstoppable, because like that is just at your age, figuring out what you want to do. Because when I was your age, I wasn't even thinking about that. It's video games. I was a little bit, I was a little bit, but I wasn't, I was playing basketball. That was my thing.
Yeah.
So what I would recommend you, just from as you kind of grow up and learn, if you're going to pick that route, because this is what I did. I was very business oriented, right? So I found a tech founder where we had the same morals and we were the same like type of person, but we were completely different skills, right?
Yeah.
He was very tech oriented. I was very business. So what I would recommend to you is, like, as you're getting older in this business, as you grow it, as you talk to an investor, look for your, Steve Jobs to Steve Wozniak. You can be the Woz. Woz made tons of money,
Yeah.
So I love that comparison because it really shows the paradox between the skill sets, how amazing. You know, Steve Jobs kind of a jerk, but he was a genius jerk. So he gets away with it.
Tech startup like billionaires are, but
yeah, they're psychopaths. I mean, that's
yeah.
I agree with you. I think that there is a certain personality to really successful ones, but I definitely think some are definitely not most.
Yeah.
Not most, but hey, if you want to come on the show, if you're a psychopathic, if you're a psychopathic, yep. Listen, we're not talking about you. We're talking about the other ones. Yeah, feel free to come on the show. Anyways, we're going to move on to number 10, which is the roadmap. And again, this is something I'll send you, but what I like to break it down is almost like 4 to 5 months, right? So in 4 months, and let's say, so 4 months from now, it's what, October of about October-ish?
Yeah, something like that.
About that. So October 2024, this is my plan. So maybe about October 2024, we've raised, our pre-seed round. We're starting to work on the MVP product. And we're starting to work on kind of the distribution of the product as well. And the biggest thing with the roadmap, this is what I've told, and I actually learned this from my failure, but in your roadmap, include when you're going to plan on raising the next round. Because how it works is you have your pre-seed round, which is your initial pre-seed funding. You have your Series A round, which is kind of like your next step up, and then you have your Series B. And typically after Series B, you scale it like crazy or you exit, right? So I think for you, just adding, let's say your pre-seed closes by, October-ish, include that in your pitch deck, and then include when you plan on raising again. Let me ask you, what is do you know anything about like kind of the raise round? How new are you to this? I just want to kind of get a gauge.
Yeah, I know about like seed rounds and stuff like that, and like distribution of wealth, or not wealth, but capital.
Sure.
Yeah, I don't really like the business model of rounds, but I know it's like the industry standards. I think like you shouldn't expect to get rounds, because like if your product is good, you should try to do your best to make the money to support yourself, and not like oh yeah, I just have this crutch, but like I understand that like it's not everyone, but yeah.
An investor will invest in you even if they don't like the idea, if they believe you have a solid plan. I mean, again, Kevin O'Leary, Mr. Wonderful, he's the king of saying like, your product sucks. Take it around back and shoot it with a shotgun. And that's like his famous quote. But he's invested in companies that he didn't think were going to be successful because they're like, that founder's a killer and they have a good plan. And so all I'm saying is, in the roadmap, you obviously want to be successful. You want to build, the product, but sometimes it takes longer than you think to kind of you're getting customers, but it doesn't take as longer than you think. And just show an investor, this is the expected estimated Series A. If you're making so much money, you don't need to raise Series A. How happy is that investor going to be, man? He's going to be over the moon, because that way, if you do, keep it private after seed funding round, which is rare, but let's say you did, they could always private sell to somebody else. They could always private, because let's say you're making so much money, you don't need it. They could private sell it. But you're at the point where you haven't saved up, $50,000 to start this venture. So you have to kind of raise, but just to be financially aware of where you're is all I'm throwing out there for you.
Yeah.
So real quick, I'm just curious, what in school? I'm just kind of curious, getting more about you. What do you have friends that are entrepreneurs, or is it just kind of you solo in this?
I don't, not to disrespect any of my friends if you're watching this, but yeah, I don't really have any entrepreneur friends. Like I've had 2 of my friends wanted to make like a lawn mowing business over the summer, but like I more thrive with the online community, as stupid as that might sound, but like just people in the Discord servers that we're in, and meeting people in there and having discussions of why this might not work, and like why this works, and why I don't like this and why I like this, just like what's it called, like
what,
it's feedback, but it's like negative, but it's good.
Is it like
constructive criticism? Yeah, constructive criticism on each other's things.
Yeah, it's good. I have friends that aren't super entrepreneurial, but we have a great time. We cut up. But I think it is important, and I liked how you are in these kind of groups, because having people with similar thinking is going to help. You know what I mean?
Mm-hmm.
That's not to say like have friends that are super fun. Like I have those friends too. But it's good that you're recognizing that. Like also surround yourself with people that, and maybe the only place you can meet them right now is Discord. Because how many 15-year-olds out there are starting companies?
Mm-hmm.
So number 11 is the marketing plan, and really the word I like to use is distribution plan. I've said that a lot, but distribution, in my opinion, means getting in the hands of your customers. Marketing just means marketing. It's such a buzzword. It's like so overused. I'm kind of sick. I'm actually sick of it. I hate that word, but people know what it is. So I give you, let's say you're asking. By the way, have you included? I don't think you have what you're looking to raise, or you're just kind of filling it out right now.
I think I've said this privately, but it's like somewhere around $100,000 to $200,000. Something between that range.
And what we'll do, I'll actually give you a good gauge here in a minute to figure out what you need to raise. That's a huge question. I'll help you in the next slide there. But for distribution plan, let's just throw a number out there. Let's say $100,000. Okay. Kind of gauging where your headspace is at. I give you $100,000, tomorrow. Where are you putting that money? You mentioned kind of sponsor. Where else?
10-20% in like Google ads and stuff like that. Producing our own video advertisements and like explaining what this is, because everyone is like, you don't want to read the big paragraphs I have. Large portion of it would be for web hosting, buying relevant domains that we would use for the website, and web development as well, so we can not outsource, but like purchase, we can hire someone to help with the web design and what they do. And
what I like to say, what a good gauge, this is how I would estimate, because we're going to kind of we're going to segue into the investment with money allocation, because it's very tied in with this. My recommendation, and this is again from raising money, succeeding, failing, all that stuff. I recommend in this pre-seed mode, before you have any revenue come in the door, with the money you raise, you need to plan 75% into distribution and 25% the actual product. Because, this is why. So when you're not having any money coming in the door, a lot of people get so consumed with the product. It's because the product's not good. The product needs to be better. And to a certain extent, that's fair. Like, of course, the product needs to be like workable, right? Like people need to be able to do it and be able for it to work, and obviously have some kind of paid model on top of it. But what a lot of people don't realize is if it's a very simple product and it only costs, let's say you get an estimation from a company and they say it's going to cost for what you want, because you tell them, basically you go to a software development company, tell them your project needs, they're going to say, all right, that's going to cost you $30,000. Well, now for an MVP. Well, now $30,000 is what the product's going to cost. So now how can we get 75% of that, right? We take that number and we multiply it, right, for the percentage. And you go, okay, so if it costs me $25,000 for the product, I need to raise $100,000 because $75,000 will go into distribution. Does that kind of make sense?
Yeah.
So basically, like when you figure, I would actually recommend for you getting a quote from a development company of what it would cost to build what you need, because they'll quote you for free typically. Okay. So go to a company like that and say, this is exactly what my project needs. And by the way, Startup Central has a software development team. Plug that in there. But getting a quote from a company that tells you what it's going to cost, taking that number, multiplying it, and figuring out, okay, this is 25% of what I need to raise. So you see, so when the investor asks you, he goes, why do I need to give you $100,000? You go, well, I'll tell you exactly why. Because $25,000, I've already got a quote that's $25,000 going to cost to build it, and I'm going to use the other $75,000 to distribute it. And guess what? I'm going to spend 10% of that money in Google ads. I'm going to spend 20% working on partnerships. I'm going to spend, you see what I'm saying? Getting specific on them. Show that in a day. Show it. Okay. I think that would be huge for you. And then number 13 is the founder's team background and relevant experience. So let me ask you, are you planning on partnering with anybody in this venture, or are you just doing it yourself? Tell me. What are you doing?
I am not opposed to the idea of partnering with someone, but at this moment, I am not actively looking for someone, and I don't have anyone in mind for things like that.
And that's super smart, because a lot of people, what I did is you partner with someone with the same skill set, realize, now, like you said, if they bring a lot of value to the table, then you could definitely be good, good thing. You know what I'm going to recommend to you is what you should probably look into is advisor. And what you could do is build like a board of directors, and how you kind of work it is you basically approach people on LinkedIn or whatever, and you message them and say, hey, listen, I'm a very young entrepreneur. Let's say they have experience in the domain space, right? They've either been a domain trader for 20 years, they've been in the space, and you go, hey, listen, I'm building a company to solve this problem. Well, first of all, if they're the only company doing it, they're going to get super excited themselves, right? And you go, hey, listen, I don't have a lot of money to pay you right now. Actually, I have nothing. I'm 15. but I would love to have the honor of you on my board. And we'll tell you what else is going to help you. If you have like you basically get 2 or 3 people committed to your board, then an investor's going to be like, he's not alone in this, right? He's smart enough to realize he's young and these guys have been experienced in the space. They're going to give him feedback on the product and help him grow through things that he's never going to know because he doesn't. So maybe work on, like in this slide, maybe work on reaching out to investors or reaching out to people on a board. And I'll tell you this too, you don't have to give up, 20, 30% of your company to a board member. You could space it out or say, hey, listen, and I'll tell you this, if you structure like this, it's hard. So I'm giving you this advice right here. You go, hey, listen, for the first year of this company, while I'm getting everything together, before we raise, I'll guarantee you for, let's say we have 4 board meetings in the year, I'll give you 0.25% equity in the company. So after a year, it's 1%. Do that with 3 people, and by year 2, you go, after year 2, we're going to do half of that, and then we're going to cap it after year 2. But I'd love for you to be here for 2 years in the growing stages of the company. By that point, learn enough to where if you do that, it's going to limit how much capital you're giving these guys, right? Equity. And I'll tell you this, you might not want to give up anything, but I hate to tell you, you're going to have to do something to get people. Because you don't got money. You can't pay them. So if you can't pay someone, you gotta give them equity. So you do that, you could get up to maybe give away 6% of your company at most, 6-7%. But the knowledge and the experience, all the pitfalls it's going to save you, and their face recognition in the space to help you raise is going to be more than valuable. See what I'm saying?
Yeah.
So maybe you already have people in mind like that. But I think that would be super great to do that.
Okay.
Do that. So what we're going to kind of go in next is the ideal investor profile. So let me ask you, who do you think your ideal investor is currently?
Can you expand on that question a bit?
Absolutely. So, typically with an investor, we do the same thing we do with ideal customer profile, right? Identifying who you want to be an investor is super big too, because when my investor invested in my company, he wasn't great in the space, but he was a great, right? And especially being with age, maybe that'd be, something good. So ideal customer profile, we've identified that domain traders who do this full time would be our best customer. But who would be our best investor, right? Would it be maybe an angel that's invested in companies like this before, who has experience in the space? I would say so. Right?
Yeah, someone who knows the space and knows what we're doing and can see, I don't want to be pretentious, but the value in it, that value over other companies with similar. Yeah.
Absolutely. I think, and the reason why I say this is because, identifying the ideal investor is the exact same as a customer. Because basically, when you're pitching investors, you're sending cold emails the same way you would send a customer. You know what I mean? So you're basically targeting investors and saying, hey, come out and please, don't say please invest in me. That's not good. Don't say that. But basically identifying the investors that invest in the type of companies, it's going to make your conversion rate a whole lot higher. And B, like you said, identifying those people. If one of those people actually says yes, it's the exact person you need. By the way, do you know, I'm curious, do you know any places like to reach out to investors, or you don't really know exactly how to reach out?
Besides, LinkedIn, of course, but those, the Discord servers on them, those have some investors. But
that's
I guess that's about it.
And so I don't want to recommend this to you because of your age and just like it does cost a little money, but there's a platform called Crunchbase and then LinkedIn Sales Nav. And with Crunchbase, you can actually figure out what investors invest in and how much they put into a company. So you can actually target by angel investors and then target how much money they dump in the company, which I think amazing, because then you can see the sectors they invest in, But maybe the free route is going to company pages that are following domain trader and maybe just trying to figure out VCs or angels that invest in those companies. Because I don't want to recommend you to pay like a couple $100 a year when you're bootstrapped for cash right now,
Yeah.
But yeah, I think what you're doing is good. Continue to ask around in Discord servers. Any cult, maybe go to a website, contact maybe the support. I mean, there's so many ways to do it, but the biggest thing is you just got to be resilient. MVP MVP next steps, and what in the next steps is of this process. Figure out what you need right now, and just based on what you've said, you need money, right?
Yeah.
Like that's an obvious one, but like, you kind of closing thoughts. I love to hear what you think about all this, and do you have any questions for me? I'd love to answer them here.
Well, this was very helpful. I appreciate you reaching out and getting me on here. Closing thoughts. Nothing really comes to mind.
You're gonna get to where you want to be one day, because I can tell you already had the entrepreneur spirit, and you're looking. And when I tell you this is, it's not about the destination. This is gonna sound so cliche, bro. I'm about to get so cliche, but it's not about the destination. It's about the journey. My comments hate me right now. But it really is. It's going to be a lifelong process if you choose to pursue the path of entrepreneur. And it's not for everybody. Some people out there, it's too much. But if you pursue the path of entrepreneurship, it's a very long path, but be very rewarding, and people meet is And I'm not even where I want to be yet. I'm still. Startup Central's a startup.
Yeah.
But what have I identified the same way? Distribution. How am I going to do it? You're talking to you, partnering with people like you, getting on the podcast. So I really appreciate your time. So, everybody out there, where can they find you? You got a LinkedIn? You got a website? What all do you have?
Yes, I do have a LinkedIn.
Okay. Well, awesome, guys. We're going to link it down below. Guys, thank you so much for watching this episode. It was a great experience overall. Hopefully, he took some takeaways, being his age, learning this process. So I really appreciate you watching, guys. Make sure you subscribe, like, and share it to a founder. And if you're raising money, apply the podcast. I really appreciate your time, guys.